Hello and good morning. Welcome to our morning outlook. We're getting our pre-market preview today. Dr. Barton Jr. here on Tuesdays. CJ will be back with you on Wednesday as usual. We're glad to have so many folks here on this morning. Had some technical difficulties. If you look behind me, we have my trading software trying to start up again after it crashed, of course, as Murphy would have it, seconds before we got ready to go on air here. I've got some other charts up here that we'll use until then, but lots to talk about. So we'll get to charts and we'll talk about a whole bunch of things. But first, I wanted to give you our overview of what we're going to be talking about today, because there is a whole bunch going on in the markets, and the markets personality is a true Jekyll and Hyde world. We'll talk about that right now. Let's pull this up, and we'll talk about our state of the markets and what's going on. Maybe I'll jump down here to the corner to get out of your way so we can do that. So I am going to pull that up, and let me get over to my screen so I can see what you guys are saying in the chat room as well. So glad to have so many of you on. So there we go. We've got lots happening in the markets overnight. There, we finally got our trade station back up, and now we will jump in to talk about what we're going to look at today. The state of the markets, this whipsaw market, this crazy market that we have going on. And it's a market that opens up a lot of days and then trades down for most of the day. We'll look at those kind of patterns. And then we have ones that open down and trade up, and we have big swings intraday. So many things going on, but it all comes back to the same theme that we've got pushing down on the markets. We have COVID news. We have COVID-19, both the economic and the health-related things from COVID pushing down on the market. We also have the one little China fly in the ointment in the background, all facing off against those stimulus dollars that are pushing up, pushing up, pushing up. Anytime one of these is not happening, anytime we don't have headlines around COVID or China, the market is getting pushed up by all of that excess money out there. That's going to continue to be a theme going forward. Let's talk about this, what happened last night with the Navarro two-step. So it's a very interesting thing going on here with the market being just completely skittish. I said the classification there in the second part here. We've got classification of the market is headline skittish and the fear of missing out. So we're skittish about headlines and markets bouncing around, but there's also that underlying tone of the fear of missing out on this big move that we've had off of the March bottoms. So then if we look at our next chart here, we'll see what I was talking about from last night. Any of you who are taking a quick look at the futures overnight might have seen this in the evening, in the late evening, where during an interview, Navarro said the trade deal is over, made that quote during the interview. The markets went from being up, closing up being slightly up on the overnight to slamming down. They went down as much as 30 points in the S&P. Then, after that happened, we came back and the president came back and said, no, the trade deal is fully intact. And Peter Navarro also came out with the statement that that his comment that the trade deal is over was taken out of context. What he really meant was that trust in the government, the Communist Party in China, some very broad motherhood and apple pie trust in the Communist Party was over because of the way they had handled coronavirus and with the world. So that all going on. And then, so with that basically we have the move up on the assurance that the U.S. wasn't pulling out of the trade deal, and then the market looks for any reason with no particular reason. Let's just get back to where we were. Sweetness and light. The Eurozone had some good economic numbers that came out that gave us a further push up this morning, and that's where we sit. We're going to get some manufacturing numbers as well here in the U.S. at 9:45, kind of an unusual time today. So we'll continue to watch those. So we're going to talk. After looking at that, we've got a lot of market stuff to dig into and look at what's happening going on now. We'll take a quick look at some of the pre-market things that are happening, but then we're going to go in and we're going to take a quick look at the COVID news, and then we'll take a zip through several earnings, and I think there are some real possibilities out there for what is happening in the earnings, some after earnings plays. Many of you know who have been tuned in before in these Money Morning live streams that I love to play those reactions after the earnings. So we'll talk about those. Here's what we have. Here's what we have with. We'll get to those, but we're going to do some market preview first. Then we'll take a quick look at COVID, and then back into those earnings names. We'll come back and look at those. So with that, let me zip over to the other side of the. So I'll be out of the way, and we'll look at. Let's pick this up at 5 minutes, and we're going to make sure we can see overnight, so we can. So let's look at. We just saw the SPY and what happened there, and here looking at all of that action that happened last night, if you can believe it, happened in just minutes, right when the SPY was closing. So we're not going to see a lot of that here, but what's happening in the morning session with not just the S&P. Let's see. We want to go back to 5 minutes. Not just the S&P taking off this morning, but let's look at the Qs. Somebody I think just mentioned that. They're up strongly. They are up 0.8%. So we have the SPY is up 1.1%. The Qs up as well, although not quite as strongly so far as the SPY, in a little departure from what we've seen the last few days. We have the Dow is up 1.26%, so even a bit stronger than the S&P, and then the small caps up 1.7%. So it's an interesting, traditionally, what we would see in the risk on, risk off, from the riskiest to the least risky, we would go IWM down to, after that, the Qs are the next fastest grower and fastest dropper, then SPY, the broad market, and then the Dow, the blue chips. Usually that's the order of when things go up, they go up faster with IWM or Qs, and when they go down, those would go down the farthest, and the diamonds and the spiders wouldn't go down quite so far. Today, as opposed to being in order, we've got number one, number two, number three, and number four. So things are a little bit out of whack in terms of what markets, what indexes are the strongest this morning. So let's take a look at a couple of names inside of the Qs and see if we can suss out what's going on there. Apple strong. Let's see what's happening with good old Amazon. They have been strong, but now have pulled back a little bit. Again, they're going to do well as a more defensive name, as the longer the coronavirus issues stretch out. Amazon is going to be the name that people will look to more often than others. Microsoft up about the same as the market and about as same as the Qs. Let's look at Facebook. It's about the same as well. So really Apple up stronger, Amazon not quite as strong. Let's look at the semiconductor index before right now. It's up about the same as the market, about almost 0.9%. So that's sort of what we can see going on out there in the markets this morning. And I think that one of the things that we need to continue to watch is what's happening in the world of COVID. And I'm going to pull up a chart for you right now. You folks have seen this one before. There's several good ones. Worldometer, I use a lot. The Johns Hopkins map, I use a lot. But New York Times has a 7-day moving average that just is pretty useful in my taking a quick look at things. And the thing that we have to notice here is that we have still climbing over the past 7 days. That 7-day average, that dark red line, the 7-day moving average is moving up. Now, we have a lot of discussion about, well, we're just testing a lot more, so that's why the averages are going up. And actually, the testing has leveled off over the past 7 days. And the number of positive tests, the percent of tests that are coming back positive, is also growing. So there is some growing caseload in the U.S. And it's not just in the U.S. Unfortunately, it's all over the world. I have some very inside information on coronavirus in the corporate world throughout the world, and those have been picking up drastically over the past 2 weeks. And we can see that if we go out and look at in the country list, if we look at the world and what's happening out there and where things are growing, we can see the places that are the U.S. is ticking up. Brazil has tried to flatten out and unfortunately still heading higher in Brazil. India is really under great pressure. Their hospital system, their medical system is under really great pressure there. China as well is up. Germany's starting to see a little tick up for the first time in a long time, but then you have countries, other big countries that are going higher. You see Bangladesh, Indonesia, very populous countries with a lot more than 100 million people ticking up, and then of course all the folks in South America. So something to keep an eye on, because this issue of, people talk about a second wave. Most scientists believe we haven't left the first wave yet. We're just sweeping now into South America and some of the countries that don't have as broad a travel base as, say, Western Europe and the U.S. are just getting to where their caseload is going up. It's going to be something to continue to watch, and I'm seeing it kind of secondhand from friends and family that are dealing with this on the front lines and seeing growing cases within city states and in the corporate world. So so there is our kind of quick overview. In India, China's starting to pick up too again. Ruby, I see that. Oh, this morning, not the Peloton look this morning. That was last week. Today, this is the new haircut. I finally got in to get the new haircut, so I don't have wild hair out today. So that goods. We are. I think India. I think these are going to become significant issues. China's starting to close things down, limit flights, starting to limit travel again. No broad steps. It would be unusual, I think, for them to even have a massive lockdown like they had in Wuhan again. But we can't count anything out right now, and we don't know the extent of the spread there. They just don't share enough data for us to understand that. Okay, let's get back to the markets and take a look at a few of the things that are going on this week so that we can look at some of the earnings. There are a couple of interesting earnings. We're at the tail end of earnings season. We're at the tail end, but there are a few worth looking at, and then we'll slow down, take a breath, and take a look at some of the stocks that you'd like to look at, including digging into some of the data that I watch in the dark pools and other places. So with all of that, let's get out of here. Let's get back to our chart. Let's get back to a daily chart. And then we want to look at several of these of the earnings picture for several companies. So the earnings that we have this afternoon, you will see Lazy Boy coming out. So Lazy Boy, which did pretty well, they had actually taken a pop last fall, as you can see here. They had taken a pop last fall, kind of flat along, dropped down with the rest of the market. They actually dropped worse than the market. They were down 50% with the market down 33. And then, but a pretty good recovery for Lazy Boy. And I think, stay at home. What do you do when you stay at home? You want a comfortable chair. So maybe they're getting some of that pent up demand issue over here. I don't think that I would look forward to really good numbers coming out of Lazy Boy today, or a good forward path. Well, the only thing I think could be their saving grace is if they said they've seen a lot of recent sales since the quarter was over. That might be the one thing that could help out the Lazy Boy case. Make a good chair. I grew up with Lazy Boys. I actually have a set of Lazy Boy couch with the reclining couch stuff. Really nice. Love it. So who else is coming out tomorrow? KB Homes, I think this is one of the issues where we see KB Homes, Lennar last week we talked about, and they have been, Lennar has been, you can see the downward trend in the home builders. I think we're seeing some constructive things in this, and that this is a good long-term place. I think we're going to see that move from the city to the suburbs, and I think that's going. We had a big article yesterday about folks going, we'd like to have some place that, starting fresh, clean home, completely brand new. So there is a movement toward new homes and toward and out of cities, toward suburbia. So I think these will be good places to be in the longer term with the home builders, and it'll be interesting to see if KB Homes echoes if KB Home echoes some of the other better data that we've seen lately. That will be one interesting to watch today. Tomorrow. Now, another one that I think is a one that I'm going to be watching big time from after the earnings announcement trade rebound. Let's watch what has happened with National Beverage. Now, if you don't know National Beverage, they are located on the east coast of Florida, and they have their big brand. They have Shasta Colas, the Shasta brand, sort of a second or third tier soda beverage, kind of Coca-Cola competitor beverage. But their big brand is La Croix. And La Croix and their whole line, they have a couple of energy drinks too that aren't really up there with Monster and some of the Red Bull. But La Croix has been killing it. And look at this. The stay-at-home crowd is drinking lots of La Croix. You can't go to the bar. You can't go out to the restaurant. People have been scarfing up the La Croix, and they have popped up and have exceeded their old. Here's where we were in February. They had a sell-off into February. Not as big a drop as many coming into the bottom and the coronavirus drop, and then a huge move up. And here's what we've seen in 80% or more of the stocks that have had huge moves up, is that they cannot give you good enough earnings to keep the stock up at the levels they are now. So I'm expecting a big sell the news moment for Fizz, for the National Beverage Company, and that they report after the market closes tomorrow. And then I believe we could have a rebound trade opportunity. Right now, the options are off the chart for this thing. After earnings, when options volatility will drop, I think that might be a time where you can play a rebound, especially if they really get punished. especially if they really get punished. And all the craziness of La Croix, one of the best jokes I've heard from a stand-up. We talked about La Croix. If you've had these flavored, they're sparkling water. If you don't know what they are, they're just a seltzer water with a little bit of flavoring, a fruit flavor, and they have lots of fancy names because it's a high-end brand and they charge more than regular fizzy water. They charge more than regular soda seltzers. So he said that the taste is so mild, it's like somebody in the next room whispered mango. That's what drinking La Croix tastes like, and I think I agree completely with that assessment. Okay, let's look at a couple of other earnings coming up in the next few days, and then we'll go and look at some, take a few minutes to look at some of the stocks that you're interested in today. So let's look at on Thursday. So that gives us tomorrow, Fizz and KB Homes. On Thursday we have two, and I think this one, Dryden, is showing us one of those. It's sort of like the homeowners. We thought there was going to be a big pent-up demand push on a lot of these things that weren't getting their, that weren't getting out there and being able to sell as much, so they were beaten down a lot, like Dryden, a restaurant owner. They own things like, their big one is Olive Garden. They also have Longhorn Steakhouse and a couple of others, but their big one is Olive Garden, their big mainstay. And we've seen this little pullback here recently we thought we were going to get a big pent-up demand story. We thought we were going to get a pent-up demand story here, a pullback. Then it looked like some of the day traders were going to jump in and help these stocks out, and it's pulled back a little bit like the homeowners. But I believe what we're going to see is numbers that aren't quite as good out of Darden. I believe that's a good possibility, that the recovery is not helping them out much yet. And I believe that I have a big caution flag on Darden Restaurants. Another stock that has done really well recently is Nike. Look at this, right back to the top of the page. We've talked about Nike before. I have a Fibonacci retracement. Look, they got right back, almost back to their highs of their that was the market's high and Nike's high right before the big drop. They went from just over 105, let's call it 106. They dropped down to 60. So they had a pretty big drop. They had a bigger drop than the market, but they've also had a stronger recovery than the market. A little pullback recently. I'm guessing again that Nike's going to be a sell the news moment, that they've had the run up on anticipation of good recovery. Their numbers will be good, but not good enough, not so blowout that it'll blow this thing through the roof. And I believe that will facilitate a little pullback, will give us a chance to buy Nike. The other interesting thing that will happen here with the Nike earnings is that Nike's a very global company. They have a huge reach, and what they say, even if they may or may not give guidance, a lot of companies have not given next quarter guidance and guidance for the rest of the year. That would not be surprising. I don't think they would be punished too much if that's what they end up doing. But I believe what they say about how the recovery is going to have broad-reaching implications. So we've already seen some other companies in the sportswear, in the sporting goods group. I think we saw Lululemon come out with numbers. Look at the chart. Look at that, how similar that chart looks, except that they didn't. They've had a much better recovery. I think that we might see something similar to what happened with Lululemon. A little pullback on the earnings, and then boom, a big move up afterward. So with all of that said, I think those overstated pent-up demand trades like Fizz are really some really good ones to look at. It's very difficult. You can't just go out and buy puts today to try to play if they get beat down. That's one thing I would highly recommend against, because a day before earnings, the premium on those, the volatility premium on those puts or calls are going to be so amped up. So that would be very concerning to try to do it that way. Okay, Ron, looks like a double top on. I'm sure you were talking about Nike there when we pulled that one up, and they had hit this could well be a double top. we would have to have a huge pullback. Although if you tried to draw this double top from a classic Edwards and McGee fashion, your neckline is down here. So I don't think, I don't think that one would work out. But we could get a double top here. There could be a W here or a W and go. So we'll see what happens with Nike. Got a couple of names out there that we have some people making. Let's take a look at a few of those and see if we can find some interesting things to look at. We have. Oops, I clicked off onto the wrong screen. Now I'm back. I've seen. Let's see. Go back up. You want to look at so we have somebody look at the VIX. So we've got Wells Fargo. Let's see here. Here is Wells Fargo, and the question is, 20-day crossed above the 50-day, and the stock is drifting lower. Shouldn't it have been heading up? So the 20-day crossing the 50-day. So I don't have those on this particular scan. Let me see if I've got one. I don't have it on that one. Let's see here. Wait, I will have it. Let's see. We should have a 20 and a 50 here. So let's look at Wells Fargo. We have a 20 and a 50 on this chart. And not too much. Yeah, you got the 20 coming up. There it is, but it's crossed back below it. So for whoever asked that question, Peter, it has crossed back below it. Should the stock be heading up? I think banks in general, banks had that one run up back in the Robinhood craze, the dash for trash craze, and they've pulled back. I think banks have a tough row to hoe. In a low interest rate environment, they have trouble with margins. The one upside for banks is that they have gotten to service a lot of these government project loans. So if we do an additional PPP, things like that, that helped this run up too, the fees that they were generating there. Other than that, I don't think that banking is a real jumping into it right now kind of place. Let's look at a couple of these other ones. We'll go back here, get rid of some drawings. EVOK. Not even sure about EVOK. Yeah, the pharmacy. So they popped up yesterday. I always say the same thing, and I'm not even sure what what their news was yesterday. Undoubtedly something around a vaccine or a therapeutic issue for corona. But they've already had a big run up. Look, they haven't traded any volume, no volume. Then all of a sudden, boom, 39 million shares yesterday. So if you got into this, Ken, my thought always is, if you got in on this and you wrote it up to 5, you got to have your get out point for how far down it will go. You know, how far down will it go there? Where is if you wrote it up the Eiffel Tower, don't write it back down all the way back down there. Be sure to take some profits in somewhere along there. Couple of other interesting thoughts here. So we want to take a look at the VIX. We can pull up a VIX chart, and it's and maybe even some of the tradable instruments. So if we look up, it's a little bit interesting. Whoops, I hit the wrong, after all that, VIX.X is the index here. So we can see we had the pop-up. This was Thursday a week ago when we had the 7% down day in the broader indexes, and then it's slid back down. It's still not all the way down, and I think that's right. I think there is more uncertainty in the market than there was back here, and we saw that in the overnight Navarro comment. As skittish as the market was then, I think we'll continue to see that. As a trading instrument, lots of things you can talk about and think about here. I think with the headline risk we have right now, a long VIX trade of some sort might be warranted to just try to catch one of these big volatility pops. Is a possibility there for a guy who put that one in. Let's Let's look at, SoftBank is dumping T-Mobile, Peter. Didn't move them too much. If you look at what T-Mobile's done in the, I think we already knew they were lightening the load, and you can see how well T-Mobile's been doing. It was one of our trades in the Dark Edge project. You can see how well it's been doing, and it's down 2%. So with the market up 0.8, that is a little bit of a drop on this, but I believe that T-Mobile will survive that. But with that kind of I think it was $21 billion was the number I saw in stock that they're going to be dropping. So won't be able to get to all of these, folks, but let's look. There's JetBlue. JetBlue ran up. It's been a little stronger than some of the other airlines today. American's getting killed. It's another of our Dark Edge project shorts. It's trading down at $13.74 this morning with the rest of the airlines, actually. So Delta is up 1.3. You ask about JetBlue. It's right around 1.11. It's down around 11, and it's up a bit, up about the same as the market. Let's take a quick look. It might be interesting to look at what's happening in JetBlue with its. Here we go. Let's look at JetBlue with what's happening in the dark pools, because I think we might see some interesting things if we look at. Let's look at options activity for yesterday. You can see here. Let's see if we can stretch this out a bit. Some negative options activity with the down a little bit. 150,000. So not a bunch of big market activity going off there, but what's the general feeling from the? This was for yesterday's trading. It looks like the data that went off in the dark pools combining options and stock blocks was bullish. Was a bit more bullish than it was for other. Than with a down day, so that's a little bit heartening, I think, for that's a little bit heartening for JetBlue fans. So if you own some, if you're short, I don't know. That doesn't say get out immediately, but it might be something to watch for. All right, let's see here. We saw GE, TJX is one I like. GE has battled up and dropped back down. I think it got caught up in the day trading dash for trash, low price stocks that were undervalued. Got caught up there, and now it's back. I think we're at a key level here. If you just look at that line, certainly it's not a very good line I drew there, but let's draw it let's do a little bit better drawing there. I think we're right at a key level on GE. So that one is one with a big institutional stock like GE. A lot of dark pool data is usually kind of right in the middle unless there's unusual data on the same day. So TJX has I like a lot of the discount retailers like TJX, like Dollar General. And you can see they've had a good recovery off of their lows. They had a bigger pullback than I would have expected, almost a 50% pullback. That did take me by surprise. Their recovery has not, and I don't see a lot there on the chart that is giving me pluses or minuses. Let's take a quick look at what they had going on. Not a particularly big dark pool trader. Oops, I had it on the wrong screen. You can see only not a lot of share impact. $500,000 went off on the positive side. Then we had some smaller trades. There's another $500 million on the negative side. So it looks like fairly flat on that activity yesterday. More bearish than bullish, which surprises me for TJ Maxx to be on TJX. TJ Maxx, one of their brands. They also have Marshalls and Home Goods and several others. I'm a kind of a fan of these, buying them on pullbacks. I think I like for the person, whoever was looking at TJX. So let's see. We had somebody that wanted Tesla, and I think you can see Tesla's just blowing through the top here. Holding on right now. It'd be very interesting. It's got this resistance ledge that it's trying to get through. If it breaks through that, goodness only knows what could happen. And let's see what's happening in the dark pools with Tesla. If we look at the dark pool data in Tesla, it'll take a second to pull up. Yesterday was a modestly down day for Tesla. So let's see how that comports with say the trades and the sweeps yesterday on. Look at that. In a modestly down day, that is exceptionally strong buying in the options. Out of the top 10, only 2 came out on the negative side. And these are big options. These are big options blocks. $12.2 million worth of options, $8 million worth of options. So you can see that's a lot of options getting pushed around to 12 million. That's a share equivalent, by the way, of those options. So the control that people are putting out there. So that's pretty bullish. That's pretty bullish information there for Tesla. So we'll look at, we've got a couple of others here we'll take a quick look at. If I didn't get to yours, you can zip us in. I'm betting we can show, if somebody would like to throw up a place to send questions for the next time, would be happy to look at some and have some things to get ready for you for next time. Google. Is Google going to buy Roku? My good friend Bill Padalon wrote about that. Roku's already been strong. Roku's a great platform. It's a really excellent streaming platform, and it's not priced in. Maybe it's priced in a little bit, but I think that may be that would be pretty interesting about what's happening heading out. So let's look at Marvel, and we'll look at Marvel, and somebody else had Alibaba, and then we're going to be done because we got to be out of here before the market opens. So let's look at what did I say? We'll look at Marvel. We've had some trades in that. In the dark pool, we got shaken out on one just a couple of days ago, but strong move up yesterday, and today again it's up about the same as the market. I love Marvel. It's been really hitting a lot of dark pool positives going on in Marvel. Let's look at that yesterday. Let's see what happened yesterday with the options blocks. A bit more negative. Wow, one huge negative option block went off yesterday, and everything else seems a little bit to the positive side. So there was one big block that went off to the negative, everything else to the positive on the option side. And yesterday was a 50% bearish day for Marvel. I guess that maybe that one options block influenced things a lot. Let's see if there were some huge blocks, a lot of activity in Marvel yesterday. So that's one to keep an eye on. Look at how we had a 1.4 million share block go off, a 500,000 share block go off. So there's lots of interesting things happening in Marvel. We're going to keep an eye on those, on that stock. It trades well, and we'll continue to watch that one. Okay, so we said we would do Alibaba, and then that'll have to be it for today, folks. B-A-B-A, if I can get all the letters in there. Alibaba, up and down, up and down. Of course, the Chinese versus the U.S. thing, but Alibaba, I believe, is going to continue to dominate the online world in China. They're up, as you said, somebody said they were up $4 today, up about double what the market is here in the U.S. Let's see how China, there's the FXI, it was up 1% today. So Alibaba, it's up near the top of the page, and I think that's a good thing. I believe Alibaba, every time you can buy it on a decent pullback, on a more decent pullback than right now, it's one, 5 years from now, you're going to be glad to have it in your portfolio. From a trading range perspective right now, this $4 pop is going to move it up right up to this little resistance ledge here. We've got like a little gramophone building here, just a very short-term one, which is a bit interesting. So something to watch. We've got a line here that we want to keep an eye on too. Breaking that could propel this up and get it through those all-time highs from in January. So I like Alibaba a lot, and we'll take a quick look at it just from for a legacy stock to own and hold. Been saying that for a long time. All right, since it came out, we'll take a quick look and let's just look and see where it is. Slightly bearish yesterday, which after the big down day it had a big down day on Friday, so not too bad there. Let's see about options trades. Yeah, they came out a slightly bearish too. A lot of big options there. Well, the first one is a spread, so that one doesn't count. They were tied together. This one, so it looks like still looks like a little teeny bit bearish on the options. So that's I would count that as a little bit shorter term. So for that bearishness on BABA, especially as we're seeing it up today, up stronger than the market. So everybody, glad to have you with us on this Tuesday morning, and we'll look forward to catching you every Tuesday morning here on Markets Live on your pre-market overview. Watch Fizz tomorrow. That's going to be, or Thursday. That's going to be tomorrow. That's going to be an interesting earnings to watch with that stock up so strong. Also Nike. So we'll keep our eyes on those things, and we'll catch up with you on Tuesday. So glad to have everybody on. Have a great rest of your week. Stay safe out there, and God bless you.